How's it going, everyone? This is Anon. Sorry for the late start. This is not financial advice. This is for entertainment purposes only. But we can go get started and try to catch up. What's up, Hyun? What's up, Spencer? What's up, Drake? Sorry for the late start, guys. Alright. Oh, first time being first. Nice. Congrats. Let me check. Yeah, you definitely got first on this one. What's up, Stock Talk? Alright, so let's do this. Let me get everything started. I just need to do a couple things. Yeah, I mean, the whole market dumped. I mean, it wasn't just Aterian. It was multiple, you know. You can... Let's see. We did, for example, the SPY. Just look at the SPY dumping, right? You put up Aterian next to it. Let me see. If I do fit studies there, that's a little easier on the eyes. Okay. And then on these, we can take a look at or remove the studies. But yeah, like every stock basically that was a meme stock got just absolutely hammered today. I know that because obviously I have a large portion of my portfolio that's in meme stocks. Not like the whole thing. I have a lot of regular stocks too, but the meme stocks especially just got absolutely hammered today. And I mean, the SPY went from, here to basically almost like 400. So that's not good. So yeah, the whole market did. It wasn't just Aterian, but yeah, Aterian definitely was feeling some pain today. Everyone was high from the green day yesterday, and I even labeled yesterday's video bull trap, and kind of looks like it was. I mean, that's what they typically do on Wednesdays. So remember, guys, you've got your entire thing that goes like this. On Wednesdays, you want to, if you don't have enough premium to burn, you pump it up on Wednesdays on low volume, and then you dump it out the rest of the week, and then you hit max pain. You get everyone kind of FOMOing in on Wednesday thinking that it's going to pop, and then you pull the rug. That's what they do all the time. So, let's test this theory, right? I don't think I need that. So if we go to, instead of the 1 minute, let's go to like the 30 minute. Oh, thanks so much, Mr. Rad. Can you explain what dollar cost averaging is? Sure. Give me 2 seconds. I just want to finish this before I forget. Elbow cough. So I haven't been coughing as much, guys. I'm sorry. I know that was a big thing of yours, but... So every one of these stocks, here was yesterday, right? So this is today. I have it on... Do I have it on 30? Yeah. So this should... Each one of these little columns should be a new day. Okay. So this is today dumping, right? But what did it do yesterday? It was up and then it dumped into the afternoon. So you get people like, okay, it's going to go up to maybe like 420, and then they dump it, right? And then they gap down, and they just absolutely hammered it, like in the afternoon. And why are they doing this? Who wants to guess what it's going to do tomorrow? So right now you've got everyone thinking bearish, right? Right? You think everyone's going, oh my God, this is it. This is the market crash. So what do you do for the FOMC, right? Is that tomorrow? FOMC. Does that meet tomorrow, right? When's the meeting? Make sure I have it right. Yeah, Friday's CPI report comes out tomorrow. At what, 2 p.m., right? Is that right? June. Where's the calendar for that? Here's the schedule. All right, so that's next week, right? So this one was just supposed to be CPI data, right, that comes out. And they talk about the 50-point rate hike tomorrow. Okay, yeah. So, but, you know, if there's no new news, they'll probably pump it just to burn the bears. That's kind of what they do. Or, you know, it depends on where the options flow is. Like, we can check the options flow and take a look at it, but I just want you guys to be aware that this is what they typically do. Wherever they can burn the most people, they're going to try to do it. Okay. All right. Sorry, I'm just reading. There's a bunch of people writing in the Discord asking questions, and we need to probably get them in here. And I forgot to do that. So let me do that. Let me get these guys in here. Because we only have, I think, 17 people in here right now before. So let's go here. And don't let me forget dollar. We have to talk about dollar cost averaging, right? All right, and so I'm putting on my things to talk about. I think I should join your Discord. Yeah, join the Discord. It's free. I mean, for most people, like, they charge for the Discord. Like, ours is completely free. I just wanted to be able to, like, here, I'll link the thing for you. But yeah, like, the entire intention was just to, you know, say, hey, listen, you know, I want to help as many retail people understand so they don't get burned. Because, I mean, nobody helps you with this stuff. Like, nobody helps you with market knowledge when you first join, right? There's the Discord. It's free. Join. You just notified Discord. Did I? I didn't do that. Did I? Wait, what? James, you just notified the Discord. Did I? Did someone do it for me? And on YouTube. No. I didn't post anything yet. Why would people be mad just because you're not talking enough about ATER? You're not obligated to do anything. I hope people understand this. So the question is, bots, trade stocks, where did I find those? Oh, the reason I mentioned this is because you get so far behind. Oh yeah, thank you, appreciate it. All right, so I need to alert the okay. Where's the stream? Okay, sorry about that. Let me get caught up. I'm all flustered now, and all out of sorts. All right, so first thing we needed to do, right, was we need to make sure we get the video out to the Discord, because normally I link it with at everyone, and I have not done that yet. So we need to do that. So first things first, let's get the Discord guys in here. Some of you subscribe, so you get the notifications, but other people are not. So I'll just go ahead and There we go. Okay. All right, there we go. So, and we'll let all right. So we need to talk about Aterian. Obviously, we need to talk about all the different stocks, but we also need to talk about dollar cost averaging. All right. So just so you guys know, dollar cost averaging is basically imagine this: if you have a lump of money, right? And this is a smart way of investing. And this is not financial advice, but this is just like overall kind of like if you were to think about how to go about the best way of investing, right? If you were to take that huge lump of money, let's say it's $20,000. So you have $20,000 to invest, right? So do you go ahead and spend it all at once? No, that's usually not the best way to go. Yeah, you could luck out and you could time it and be like, oh yeah, well, So say for example, let's pick a stock and let's go back to a single view so I can just show you guys. So let's do Aterian, right? As for this example. And let's go to the daily. Let's go over here. Okay. So say on this day right here, on May 11th, and this right here, so May 11th, you got $20,000 to invest. So the price of the time was probably midpoint like $350, right? So if you were to spend all $20,000 on this stock, right, and you bought in at $350, and now we're sitting here and you missed out on a couple different dips down to 280s, 270s, in the like what do we hit today? 280s again. You're going to basically be kind of mad because you didn't time it very well. So what a lot of people do is they basically divide up the total amount that they're going to spend, and they choose to basically spread it across multiple days or weeks or months. It all depends. So I just want to make sure that you guys understand that concept. So that's what dollar cost averaging is, when you basically take a lump sum that you were going to invest, and instead of buying everything all at once, you basically can spread it out. You can do it across days, even times. I mean, this works across even like if you go on the 5-minute candle. If you were sitting here buying down here, when you got up here, you would have been super happy, right? But then if you waited a day, you would have missed out on all these like dips, and so you would have been like kicking yourself because you're like, or if you had bought all the way up on here, you were like, oh my god, the stock's running, so you frantically buy all this way up, right? And you run out of money, and then the next day it dumps. Obviously, yeah. You're not going to feel great because you spend, and your average is going to be up here when the stock's sitting down here. So that's why dollar cost averaging is smart, is you're spreading it across different times. Like everyone wanted to know why I didn't go all in right when I sold my house. It's because that's not the smart way to invest, in my opinion. Like, I mean, obviously none of this is financial advice, but like when I got that lump sum of money, I'm not throwing it all in all at once. Like that's not the smart way of doing it. So, I still have a little bit of money that I'm still, I got to buy more today. And I'm looking for the stock at this point, and I'm trying to get as low as I can to get as many shares as I can. That way, our float, the percentage of the float that we own goes up. Because once they go into my hands, they're not leaving. So. That's what I'm just trying to tell you guys. Like with dollar cost averaging, you want to go across a period of time, and that way you're not, for me, I'm just looking to buy these dips, and I'm trying to save up as much cash as I can so I can buy them. And once they get into my hands, they're not going anywhere. Unlike some people who are just playing it for a squeeze, I'm trying to accumulate as many shares as possible. So, the people who were like, oh, this thing's not moving, and they sell for a loss, that's not how I'm doing it. So, okay, so let me go back. So I feel like I answered that question, hopefully, Mr. Rad. There you go. All right, so. Oh, wait, I didn't tweet. I'm supposed to tweet. Sorry. I'm like all over the place. But let me just finish this and get... I always do this routine, and I got kind of broken up by... All right, so we're just going to take this, cut copy, I'm going to paste it, and then paste the YouTube link, and then we should be good to go. That's the extent of my tweeting. Okay. I'm all caught up now. So, let's go over the stuff. So, CPI data comes out tomorrow. So, it's either going to go one of two ways. It's going to just rip and burn all these, we'll have to do like a scanner just to see real quick. Let me take a look and see what the SPY max pain is tomorrow. So, the SPY max pain tomorrow is 409, and where are we? We're at 401 right now, right? So the question is, do we dump down tomorrow morning towards FOMC and then rip up at the end of the day to basically burn all of the people who went bearish? I mean, look at this. Look at this whole day. It's all red. Every hour was red. I mean, look at that. Like, these are the 4-hour candles. So we had that nice move up, move down. We're basically just chopping around, and then we finally just fell off a cliff. All right? So do we gap down? We end up in the 3s tomorrow, and then we rip up at the end of the day to burn out some of those, those bears. Nobody's safe. So okay, sorry. Somebody was like, I'm leaving the server because there's too much, I basically tell people when I'm doing it. And I'm like, you can just mute me or mute the notifications. Okay, sorry about that. All right. Let's do... Didn't hit my load zone, I said. Yep, 2 cents off. Yeah, I was going to say, people are buying the dips on Aterian, so that's good. The 50-point rate hike tomorrow, 500-point rate hike tomorrow. Yeah, they think that was a dump. I missed the 1.5 swings daily. That was fun. All right. So I'm just catching up on these now. So the question is, bots to trade on stocks, where can I find those? So I know the eventual goal for us is going to be trying to get smarter about how we trade in our Discord. Obviously, other people charge for their Discords, but for us, we do not. And that, if we did charge, then we would probably be able to put out, maybe I'd hire some programmers and we'd program some bots, and we could actually have kick out like algos that like when a certain thing is reached, like if volume's picking up and the stock's moving a certain percentage, algo can do it, and we can self-test and see how they do. I've seen Discord servers and other types of servers that do that sort of thing, and I think it's a really good idea. It's just we don't, because we're a free server. You kind of get what you pay for. Like that's a nice service that I'd love to be able to provide, but it's hard unless people want to work for free and give it out for free. But if anyone likes programming and wants to hook up the community for that as a trial basis, yeah, I'm all for it. Okay, whale alert. I bought 4 more shares today. Hey, go bought 4 more shares. That's awesome. What's up, Jason? How are you? All right. And talk whatever you want to talk about. Right, talk about whatever you want. Drink some whiskey. Start your whispering again. The ASMR made me sleep so good last night. I could do a little more whiskey. I drink scotch. Do you guys want me to do the? Hold on, ready? Is that a good sound? All right, ready? I'm gonna pour my whiskey, my scotch now. Straight from the barrel. It smells of rich mahogany. Oh, that's too much. Stop. Okay. All right. Yeah, but it's cool. I was gonna say, I'll have to link you guys here. I'll link you guys what it looks like. Just this like barrel. Whiskey barrel. Yeah, it's this thing right here. I don't know. Here, I'll give it to you guys. I don't know if you can see that, but that's what it looks like. It's a 5-liter whiskey barrel. And you can personalize it. So my friend gave it to me as a wedding gift, and it's got his name on it. And actually, I take it back. It has my name on it and his wedding, where it was, and he and his wife, their names on it too. So, all right, let me catch up. So, here we go. Hello, Becca. What's up, James? Hello. I'm a bit of a binder. All right, so ATER's going to be in the 2 and 3 for months. Too many distractions, no volume, catalysts. Yeah, I mean, if that's what you think, that's fine. I mean, I'd also point out to you that that's what we said back a couple weeks ago, and then it all of a sudden got massive volume out of nowhere, and nobody can explain that because there was no news, right? Like this entire run, look how long it went with no volume. Look at the volume. Where's the volume? See this little tiny candle here? Where's the next volume candle? Right here? Right? We had, 4 days of volume that were greater than 3 million? So 1, 2, 3, 4. In how long? 1, 2, 3, 4, 5, 6. Since December. So we had 6 days in 4 months that had greater than 3 million volume. So this stock was dead. It was just chopping in, well, let's see, what's the range? It was chopping in the 3s and the 2s. Oh, wait, same thing, right? So this entire time right here, it's in the 3s and the 2s. This entire time, right? And then the stock was dead. And then all of a sudden, out of nowhere, tell me what catalyst drove this. Their TACT 77. What catalyst drove this? What was the amazing thing that Aterian did that made this news and made this run up? Anyone know? Who's got a guess? What news dropped that made this run happen? Yeah. Nothing happened. And it just ran from a 3 million day to a 145 million day over that weekend. And then it ran all the way up to 7, and now it's been chopping around. So, yeah. You can say that there's too many distractions, no volume, blah, 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 blah. We had that going for months, and then randomly just ran up. To avoid the headache of timing the market, do you invest over time? Yeah. So, timing the market, honestly, most people fail miserably at it. So what you do is, for example, let's go to the SPY real quick, because this is a very easy way of doing it. So if you're investing over a long period of time, right? So say, for example, you joined the workforce back in, what year is this? 18? I don't know how old you guys are. Some of you are much older than that. I started work much longer ago than that. But let's pretend you're a new college kid and you start out investing here, right? And so you put in your paychecks each and every week, right? And so the days go by, and then all of a sudden the market crashes, right? Oh, woe is me. All my money's gone. Well, you don't need this money. It's in your retirement account, right? In this case, because we're pretending like this is some sort of retirement account. And guess what? People freak out about this. This is the best thing that could have ever happened to you if you're young, or if you at least have years left, right? You want the market to be down when you're investing. You know why? Because when you need the money, you want it to go up then. So when people are freaking out and all this stuff, just buy more. And honestly, if it drops more, buy even more. Like, whenever things look really bad, that's why there's that Warren Buffett saying, be greedy when others, be greedy when others are fearful, and fearful when others are greedy. Yeah. So like right here, when everyone's freaking out, this is when you should be doubling down and like buying as much as you can. And yeah, you may miss it. You may say, okay, I'm putting in a bunch of money here, and it keeps going down. Guess what? Just put more money in when you can down here and down here, because eventually the market does go back up. And when it goes up, it usually rips up for long periods of time. If you follow this out over like weeks. All right, so this is, hold on, can I go back? It's not letting me go back. But this was, what year is this? Can anyone read that? I can't even read that myself. That's 2021, 22. I guess it only lets me go back a certain time. Let me time frame. Here we go. Give me max available. Okay, right? So this goes all the way back to 1993, it looks like. So in 1993, the S&P was at like 52. The S&P now hit a high of, what was it, 480, something like that? Was that right? It was like 4... It was like 480, right? So, yeah, you want to buy and keep buying across the course of time, because it doesn't matter when these things go down for a little bit. These are minor bumps in the overall. That's why you want to keep investing. So, say for example, the smartest thing you can do, and most people that outperform are just people that buy and hold long term. If you try to time everything, that's when you can mess up really badly. Day trading is rough, honestly. Like, day trading is rough, and if you can get it, that's awesome. Most people are not successful at it. So the smartest thing for a lot of people is this. You buy a stock that you like, and when it goes down, you buy more. And you keep doing that for all the stocks you like. So for me, I've got like a handful of stocks that I picked out that I thought were good. So I bought Amazon back when they were like $600 to $800 a share, and then they ran all the way up to what, like 3,000, 4,000 a share or something like that. And I just kept buying it when I could. I did that with Tesla when it was like 60 to 80. I did it with, I actually bought IIPR as an IPO, and when it went down, I bought more, and then it screamed up to like 300 a share. It's gone down since then, but it's fine. Most of my stocks have gone down since then also, but at the same time, this is what I do. I find stocks that I think are good long-term investments, and then I just buy it. And so, you know, when the stocks go down, I buy more. So for me, with Aterian, yeah, it's been underperforming, so I've been buying more. And then eventually when it goes up, I'm going to be really happy with it, because this is what I've been doing my entire investing career. I find and pick stocks that I like, and then I just go long on them, and I just let it just grow. And yeah, I'll swing some stuff here and there if I don't think it's like a long-term investment, if I think it's a short time frame. And I did that like on RedBox. Like, I don't think that's a long-term investment, so I swung it, and I'm fine with that. Because when the merger hits, it's going to drop like a rock, and it's going to be basically worthless. And all those people that are buying puts on it will make tons of money. But until then, they're all probably sweating their, tuchuses off, because I mean, it's, what is it, 1,000% cost to borrow or something like that, something crazy like that. So yeah. So okay. So anyway, but yeah, you want to buy, and you want to hold, and you want to, eventually you'll be rewarded usually, because most stocks eventually over time, unless they're getting delisted or something like that, they go up. And that goes for most things. There's not a lot of stocks that just plummet to nothing and then they just go away. Like, it can happen, but for the most part, if you pick the right ones, it usually is pretty good. Yeah, Switch, for example. Like, I bought these guys as an IPO, and as soon as I bought them, I think I bought them at like 20 a share or something like that, and they got all the way down here to like $6 a share. Did I sell? No, I just bought as many as I could they bled the entire time I bought them. It was rough. Like, this is on the weekly, this is the daily. Like, it went down for literally like years, and it went all the way down to $6 a share, and now the stock's sitting at 33 a share, or 34 a share. Like, that's what you do. So, anyway. All right. With the SI and the free float, pretty similar. Utilization at 100%. FTDs are piling back up, or did they reset them with enough tree shake? Yeah, so here's what's going on. So let me pull up Aterian real quick. So everybody wants to know, all right, because the new data just came out, and everyone wants to find out what's going on, right? So let me pull up the daily right now. All right. So I drew this box out so you guys can see this. This box represents the time when the it's like the 15th through the 31st, which is what basically the reported short interest is showing. The new information that just came out, and it said 8 million, right? So from this point right here, this snapshot in time, they're showing you from this date to this date what happened. So let's zoom in on that. Let's take a look. What happened during this time? Well, look at this. We had some green days, right? A couple red days and a couple green days. So what did they do? They probably actually covered some during this time frame. And because they know something, what happens on this right here. Remember I drew out this box for you? So I just want you guys to understand how these things work. So they basically decided that they were going to cover some during this time frame. Why was that? The reason why is because they know that there's a blind spot. So now As soon as that date finishes, they know that from this day until the 15th, or in this case, it was a little bit sooner than that, we would get the next set of data, right? So this entire time right here, we're not going to see this until the next set of data that comes out, which is the end of the month. So the beginning of this month won't be reported until the end of the month. So we're always a little bit behind on this data. And this is how Ortex and all them do their numbers, is they basically adjust them based off of what they think is happening. So we're trying to come up with a better system to track all this. But what did they do as soon as they covered during this time frame? They shorted. So the reason why it went from 8 and it's probably at about 10 or 11 million right now is because during this time frame they had to short again. And we won't see that though until the end of the month. So we're always a step behind as retail. We don't have live accurate data that's tracking all this. Ortex and Fintel are our best, options, but at the same time, this is the closest we're getting. So it's not ideal, and we're trying, right now the Discord is trying to figure out a way of writing up something. Like I've been working with Fish and some other people, and we're trying to talk about how do we go about trying to figure out the best way to inform retail and give the most accurate numbers we can. Like the thing that separates us between, obviously when you study for Series 7, I actually got the booklet just because I was curious. And I thought it would be a good idea for me to learn as much as I can about what the other side knows. Because obviously on the retail side, what most of us do is we sit there and we read some Investopedia articles, and we might read a TA book, and we might read a couple books here and there about investing, right? That's as good as we ever get. We're not sitting there studying for a Series 7 where we get tested and the knowledge is beaten into our heads. So I wanted to do as much as I can to learn about all this stuff, and because there's stuff that we should know as retail investors, but we don't. Nobody sits there and goes, well, let me put on some training wheels so you guys are okay. No, they basically throw us to the wolves, and then we get eaten alive every time a new person gets onto the market and says, let me try this trading thing out. And they try it out, and they get absolutely hammered, right? And then they go, well, this isn't for me. And they start again, and they just put money into a passive fund, and that's how they will invest the rest of their lives. There's very few people out there that are willing to put in the time and effort to basically get hammered around and then eventually learn and then become successful traders. So my whole goal for the Discord was just to try to keep people from having to go through that step of just getting absolutely hammered. Yeah, obviously we get hammered too sometimes when we pick stocks and we like them, and we picked a stock in this case with Aterian that was being heavily shorted. So this is one of the most painful ways of learning, is that the market's unfair, is because they get basically every loophole. They get for example, when we were running up here, right? What was happening during this entire time frame, and it was confirmed by investor relations and other, FINRA that I talked to. This entire run up here, our brokers were failing to deliver every single day. You know why? Because they weren't buying our shares, right? So they're not adding that extra pressure. And then we got to the 7, and they absolutely just hammered it down, right? They used all the shares they could. They basically let it up just to hammer it down and then try to shake out retail. And this is what they do. And they keep trying to do this over and over and over again. The question is, though, at what point does retail smarten up and go, all right, you want to do that? That's fine. We're going to buy and accumulate on this stock, and we're going to show that we, own this thing. I think, what gamers say? Was it Gamer UK? He's the one that had written up the thing about Fintel thing, right? Well, he was saying that, he calculated out as, 221 people own 7% of Aterian's free float. That's pretty crazy. Think about that. 221 people own 7% of Aterian's free float. And that's not even scratching the surface, because there's tons of people who are international that can't link their accounts. And we'll probably have to figure out a way of accounting for some of those. But in this case, like, I just think that number is crazy if you think about it. Like, 221 people. So 221 people own 7% of the free float. That's crazy. All right. So, moving on. Yeah, there's plenty of things that can happen, and one of them that people have talked about, but you guys have to realize that these short hedge funds, or just hedge funds in general right now, are in some pretty deep crap. And the reason I'm saying that is because I've been listening to the Bloomberg, and they have a section, or this reporter that covers basically hedge funds, and she was saying that plenty of these Tiger Cubs, if you guys don't know what that is, basically there was a guy, the Bill Wang guy, or is it Wang? He basically was part of, what was the firm called? It was like Tiger or something. They were banned in Asia. Was it Tiger Investing or something? Hedge fund. Tiger Global Management, right? Is that right? Was that the name of it? Yeah, Tiger Global, and they got banned in Asia for like shady stuff, and then they all kind of went off to different things. He got like punished, and they got put into a private office. He was still managing tons of money, and he's the guy that over leveraged like multiple different like funds and banks, and lost them like millions or millions of dollars. Like, it was crazy, and so he was just one of many. So they call them Tiger Cubs. And all these Tiger Cubs all learned how to leverage very, very heavily. And what happens is, over time, these guys have built up so much leverage that if they go, up, it screws up the entire market, because all these banks, all these things are just going to start having to eat these. That was a big deal. What that guy did, Bill Wang or whatever? But there's multiple people out there that are now like in these short hedge funds that are having trouble now, because what they did was they leveraged the crap out of like all the like tech stocks. So they got completely over leveraged on the tech stocks, which is like the S&P 500 basically. And now that those are going down, they're getting very, very dangerously close to getting margin called, where they're literally having to pump and dump like crypto and other like asset classes to basically try to make enough money to keep their heads above water. Because if they lose control, the small ones will start going first, and then they will knock down. It's like a thing of dominoes. Once you start with one and knock that down, all the rest of them will follow. So all right, so let me just read. But yeah, we don't know what's going to happen. There's all sorts of things that can happen in the next couple of weeks. This happened on no news, and we ran. It can happen again. We've been consolidating. At this point, I'm pretty sure that anyone that was in here that was, paper handing is now out. So it's back down to the core ones that actually believe and understand what this is doing, and they're starting to prove it by locking up or at least proving how many shares they own through Fintel. So okay, check out the large scale orders for the last 2 days. I don't have a stock scanner. I need to get that though, but I can take a look at the tape later, and I'll see if there's what you're talking about. But did they show? Let me just see if. Yeah, you're right. The largest ones are here. So large orders were 7%. Medium-sized orders were 30%. So, yeah, the large orders were obviously very much, larger than the sells for the large orders. Not even on the mediums, and then the smalls I'm not really worried about. All right. Hyun says, just a hypothesis, could we have too much volume right now that smart money doesn't want this to rip yet? Just like last run, it went up really high. We only had 500 to 700K daily. Which day are we talking about? Like yesterday, we went up because basically I think they were just pushing it up to burn out premiums. They wanted to get more people buying 350s and $3 so they can try to burn both. And they might get it. I don't know. I mean, I hope tomorrow it rips up and we finish above 3. But I know that right now we're looking at the options chains. They're going to try to make sure it's under 3. And if it's, obviously a bad, if the market's crashing, they're probably going to get it. So why do people typically buy in the mornings knowing that later in the day the price usually goes down? Wouldn't it make sense to buy later in the day? It seems like a daily pattern. Yes, the most trading happens at the beginning of the day and the end of the day. And you're absolutely right there, Casing. It's usually because people are impatient. And I know that's probably hard to hear, but think about your own trading patterns. Most people are absolutely just chomping at the bit for that morning bell. It's human nature. And the stock market knows that. So what do? We all sit there and we trade in the first couple of seconds of the day. And then we see how it goes. And we're like, okay, things should be shaken out by now. And then it's not. And then by the afternoon you go, oh, I should have waited. That happens to a lot of people. It's happened to me in the beginning. At this point right now, because, that first couple of minutes, that's usually what sets the tone of the day. And, all right. You dropped today. Hope it stays that way because my paycheck's tomorrow. Yep, my paycheck just hit tonight, so I'll be able to buy some more tomorrow. Also, please slap the like. Thank you so much, Becca. All right. I feel like we're turning into a heavy drinker. That's fine. I really am not drinking that much. I usually have a glass, and my glass is very small. I usually did it for my throat, but yeah, I'm not a big drinker during the week. I'm usually talking to you guys, and then I go upstairs and I go to bed, and then I start my day again. This is my day. I wake up at 6 a.m. I get my kids ready for school. I drive to work, 45 minutes to work. I go and I get behind my desk and start talking on the Discord and looking at the pre-market. And then I typically, in the winter, I have lots of time, so I typically am able to write some DD and do some research. During the summers, though, it sucks because I'm in the field a lot, so usually now I'm having to go out in the field and do my job again. So that's why, if you guys are wondering why it's taking me so long to get all the DDs out, it's because I'm actually having to do my job. I can't actually just sit around writing DD all day long. And then what happens is I finish work at 5, and I go pick up my kids, and then I get back to my house by 6 something, and we feed them, give them a bath every single night or shower, and then I read them books, and then I come downstairs and I talk to you guys, and then I finish around 11. I usually go upstairs and then go to bed and wake up and do the same thing again. That's my entire life right now. And then my wife is like, I haven't seen you in weeks. I get to see her on the weekends. That's basically it. Yeah, some gators were happy today because they were waiting for a nice loading zone. They got it. Yeah, it's good. Goat drinks cheap beer and shoots tequila on the weekends with my cheap beer. Hey, everyone does their own thing. My scotch is cheap. I get it in the handle, and then I pour it in this barrel, and it makes it taste good. Jonathan Robert, sorry. What's up, Anon? Good day to load up. Yep. Junior Bigmon. Did we get rug pulled today? I mean, the whole market got rug pulled today, so it wasn't just Aterian. You guys need to, like, honestly, like, whenever you are paying attention to one stock, what you really should do is just put up two things if you just want to see what's going on, or three things if you really want to be, like, a little more diligent. Put up the stock you're looking at, put up the SPY, and you can put up, you know, the Dow, or like if you want to watch, but like find something that, like, IWM, which is the small caps. You know what these look like? Do they look similar? Yeah. Right? Do they look similar? Yeah, they look similar, right? And then compare the stock. So, like, look at when you're waterfalling, like, make sure I'm on the daily. I need to go in the 1 minute. So take a look at your, like, we start out, we go down. In this case, the SPY went up, but like this is probably not the greatest view. I should probably let me do it this way. Let's do it this way. That way everything's uniform, right? So do SPY on the 1 minute, and we'll do IWM on the 1 minute. I just want you guys to understand this part. So compare them, right? So here is Aterian. Here is the SPY and the IWM. So, like, we came down, consolidated, and we were going down. And just if you look at the right timestamps, like, let's see, around what time did the SPY start dumping? Right, it was around 2 o'clock, right? So around 2 o'clock, yeah, we started going down just like the SPY did. They had worse drops than we did because we're already at, like, support, like this red line support. And yeah, we cut through it and we bled, but we could pop up there tomorrow morning and be fine. And if we do go a little bit lower, that's fine too. Like, it's not the end of the world. Like, there are other supports, and honestly, the lower the price of the stock gets, I mean, the more we can buy. So, all right. I need to get myself some root beer again because my friends tried to convince me Dr. Pepper's with real sugar is the nectar of gods. They're wrong. All right. All right. Stock top. Goat. Did we just become best friends? Yep. So we're going to be waiting a year for volume? No. Earthium, it won't take that long. It'll pop on something. There's plenty of things it can pop on. People get very dramatic when the stock's not going the way they want, and you have to understand, like, I've been doing this for a long time. It doesn't really faze me. Like, you get used to it. It's, to me, these are just numbers. Like, they're just, like, look at our 1 hour. What did Aterian do? It just went down today, basically. And what did the SPY do? It did the same exact thing. All red bars. It's all day long. That's all. You guys just have to remember, it's across the board. It's not just one stock. Like, look at the SPY today. Oh, wait, all red bars. Yeah. Like, we dumped just like the stock did, or the SPY did. How about the IWM? Did they rip on the hourly? No, they had the same thing as the SPY. We're following the market. They don't have to short as much, too, so I'm expecting a bit more of a dip before a run. Yeah, I mean, that's very possible. Like, That's why you don't blow all your ammo in the beginning. Like if you just like spray and if you just spend all your money all at once, you're going to probably kick yourself. And that's why we were just talking about dollar cost averaging, is like when you get some money, you don't have to buy everything all at once. And also don't watch the minute candles. I know I watch the minute candles, but that's only because it's better entertainment for at least watching what the stock is doing. If you want to do it if you want to buy, do it on a much slower candle, and then you can get a better sense of what's going on. Like if you were sitting here watching this candle on the hourly, you probably wouldn't be like, yeah, I need to buy now. If you watch it on the 1 minute though, when you saw this run up, you might be like, yeah, let me get in. And then as soon as you buy, it bounced off VWAP and went down. Like, that's why you have to be careful what time frames you're watching on also. All right. Carl says, what do you think about coordinating buys? So, Carl, we can't coordinate anything. We're retail investors, and that would be collusion, and we don't do that. But you could always look at the options chains, and if you think something one week is more popular than the others, you could also place your stuff there too. The thing at the end of the day is this: everybody is an individual investor, and we can't control what other people do as much as we would love to try. So we don't do that, and so what I can tell you now is you can always look at the options change yourself and decide how you want to invest. Okay. SI was the catalyst that made it pop on the Renaissance radar. Yeah, I mean, you guys have to remember, Renaissance invested in this stock. Renaissance is one of the most successful hedge funds, and they bought before GME, they bought before Spurt, they bought before. If you can look at some of the other things they're buying right now, they're buying a lot of different things that are considered volatile stocks. So they must clearly know something is going on if it's on their radar, and they bought. So we got spanked yesterday, didn't we? Who got spanked yesterday? We were up yesterday, Corgi. And on If This Ever Flies, I'm going to commission a pic of diamond-handed alligator attacking hedge fund hunters. Please put that up in your house and then frame it. I printed a 3D Diamond Hands Wall Street bet kid months back, painted it, and came out awesome. Oh, that's cool. Yeah, drop a pic in the Discord. Goat, that'd be cool. There's money to be made in RedBox. Merger is second half of the year, so July 1st is the earliest. But reading, it sounds like August. Yeah. So, Michael, I'm going to be completely honest with you. Every single time I've been told that there's no way that they could rush this and it will always this is going to take much longer than you think. I can tell you right now, they can announce the merger at any point, and as soon as they announce it, now everyone has a date on when this is going to happen, and they have a game plan for it. So just be very, very careful. Like, I do have a couple RedBox calls, but I am letting you guys know that they are very short-term plays, and I'm basically scalping them. And I'm not being greedy with them, because if you start holding on long term and you start buying when it's running, you might be ending up bag holding or losing a good chunk of money. So just be very careful what you're doing. Like, I was told that there was no way that the SST stuff could be possibly moved up or done within I think, what did they tell me? They told me it would take at least 3 to 4 months for any sort of S1 to get filed and cleared, because look at the SEC. They're dragging their feet. They take forever. On average, they were taking, and I started researching into it, and I actually noticed that they had been improving their average, and I wrote a DD on that and actually explained that to people. and they ignored me. And then when they dropped hard because all those warrants hit, and I told people about it. So, and I told people about the warrants on BBAI when they were trying to squeeze that, and I'm like, dude, the warrants are at like $12.50. Like, what are you doing? And they tried to squeeze it, and they got hammered down. Then they issued out more shares. I do like them long term, though. So BBAI, I do like them. But yeah, just be careful. Okay. If you still believe it's not a matter of if, but when, yeah, I absolutely do. Aterian's going to get its day into the sun at some point. I don't know when that is. I didn't know that the last run was going to happen. I'll be honest with you, I wasn't expecting that. Like, this run right here, we have been bleeding for days. I didn't think we were going to go from 3 million to 145 million over that weekend. I had no idea. I was hoping we would get like 5 million in volume. In my wildest dreams, it went from 3 million to 145 million, and then topped out with like 180 million. Like, these runs can come out of nowhere. If somebody gets margin called and that same short is short Aterian, that can start the domino effect. So you never know what's going to happen. And they still have a large amount of short interest against them. So as long as that happens, and as long as they're still a company, there's always the potential of a short squeeze with these guys. True Words Anonymous. Bull markets run a lot longer than... Are you trying to say... Bull markets run longer than... I think you mean bear markets. Look at the tulip market. Yeah. Yeah, RedBox is too risky to get stuck with something. Yeah. I hope you... Yeah, and I for me, I hope they pop off tomorrow, but I'm just letting you guys know that, like, for me, I'm playing it very short term for that one because I do not want to get stuck holding that stock because I mean, they already established what their price was going to be. And I know if they get up to 18 and stay there for over 30 days or 20 days or whatever it is, that they can buy back the warrants. But I can tell you guys right now, it's going to be hard to get to 18 if the warrants are still, like, able to be reissued. Because they said that they can be reinstated. So, all right. Yeah. All right, so you guys want to cover real quick DTC as well. Obviously, DTC got hammered today. That was not a lot of fun. So let's take a look at it. So DTC is, let me just show you. Oops. So it had this nice little bounce here, and it was going up, and then it crossed over the MACD, and it was running up, and then all of a sudden the market kind of slowed down, and they've been... See, I think retail caught interest in this range, and what they're trying to do now is they're trying to basically push the stock back down. And so what I'll have to do is confirm that with the S3 data eventually. But in the meantime, let's take a look at what we can, which is yeah. So they did actually add some to their short interest today. Short interest though, cost to borrow is still like low. We're going to see, because this one's the one that has the weird float thing that, like, we're not quite sure what's going on with it. So, very interested in this stock long term. Like, for me, I've got some November $5 calls. And I have a couple puts that I sold long term. So, I bought out in November because I want to have plenty of theta on this one just in case, and I'm glad I have theta because obviously the stock's been going down. But if you look at their balance sheet, I think these guys are very much, basically anything under 5, I'm buying on these guys. Because I think long term, like even if this doesn't work out as a short squeeze, I think long term these guys can reverse and go back up. So I am going ahead and seeing that. But my guess is the biggest thing that I can see with DTC is they appear to have a really, really large ownership that no one seems to be acknowledging. And here's where I kind of get a little bit like head scratching what's going on here. And I'll show you guys why. I'll just snip it real quick. So even though it wasn't a great day today, let me just show you something that I find interesting, right? Which is, I'm pulling it up for you right now. All right, here. So here, DTC, solo brands, right, Class A shares. So look at the shares outstanding, 63 million, right? Look at institutional shares long, 81 million. Right? So we did a breakdown on this, and I'm still trying to make sure I kind of like wrap my head around all aspects of it, but let me pull up this real quick. So we have 63 million shares outstanding, right? We have the float being roughly, quote unquote, 29 million. Because that would be your shares outstanding minus your insiders, right? So you have Summit Partners, they have 29 million, 29.8, so almost 30 million shares there. You've got Bertram Growth, which has about 11.7 million, and you also have Bergman Group, which has about almost 7 million shares, right? So you take that away, that leaves you with a float with about 29 million, right? Now, they have these guys here up here that own almost 5 million shares, and they're listed as like, I guess, I'm trying to think. We think they might be like considered an insider because they're holding a lot of shares and they haven't seemed to sell any of them. In fact, they've just been adding, but they're not being counted as that. So I don't know what's going on with these guys, but it will just move towards institutional ownership then, right? So if you take the rest of these filings then, so say it's this one through down here. If you look down here, it gives you 26 million, right, for the ownership. So, because before we were adding it into the insiders, but we didn't do that. Let me just make sure I didn't. So from here to here, that is 40. See, this is the problem right here. So see this is 48 million here, right? So 48 million for just these three entities, not including even the executives and the officers that hold inside. So this is where I'm screwed up, right? So if you actually add up these three right here, you get 48,422,000, right? This number right here, or 72, sorry. But on Ortex and Fintel, they're only counting these ones. Right? So where's the confusion? These are all Class A shares. These are Class A shares, and if you add them up, that's 48 million, which are insiders. So see what happens here. I'm just going to show you guys something real quick, right? So the way this normally works is you take your Class A shares, you minus out insider ownership, and then that gives you the free float, right? So I'm going to show you this. Pull it up. All right. So in this case, though, we take our 63 million, right? So we're going to do free float. So we're going to do Actually, let's do it this way. I'm going to move things around. Okay. I'm going to put it right next to. I'm just taking out this whole column. So I just want to show you how this works, how it should work, right? So right now I'm taking out this minus insider ownership as 34 million because that's what was being reported on like Ortex. So I want to show you what happens when we do it our way, right? So this is the way you normally would do it. So you would take your, so let's say equals the 63 million minus, right? And then we said the number, I shouldn't have deleted the number. Let's see this column. All right, I need to add this up again real quick. So it's 48. Shoot. Is it 472. Is it 887? Okay. 887, right? So this is the number of insider ownership that's being reported, right? Not even including what the officers own. I'm just going to show you how screwed up this gets, right? So we'll go to number and we'll take away the indentations. So this is the number just off those three insiders right there, right? So what does that make the float then? So we take this number, right? Yep, this number minus this number. That means your float, if you just take those three insiders, is actually 14 million. Well, wait a second. If we just establish this, so if these guys aren't insiders, that means we count them for the rest of the institutional ownership, right? So if you take this number then, which is what, 26, and we'll put it over here. I'm going to put it right here. 26. $342,190. 342,190. 26. 342,190, right? So what do we have here then, right? So for our free float after institutions, we take, then what is this? I'm in the wrong spot here. So our free float after institutions, we take our float minus our institutions, gives you 11 million negative. So I just showed you guys the numbers, right? So we have a negative float on this stock. Doesn't make sense. Something's going on here, right? So somebody's like, okay, are they Class B shares? Well, they're not. These are all reported Class A shares. You can go through the 13 Fs, and they're all listed here. I just showed you 3 of these together makes 48 million. The rest of these that are institutional filings on there are all adding up to 26 million, right? We did that together. You saw that. That's right here. That means if you take what's remaining of the float and you minus that from institutional ownership, you get a negative 11 million float. Right? And so what's the short interest on this stock? So the short interest right now is being reported at around 3.2. Let's just use the number here. That's 32. All right, here, right? So if you take that, right? So if we do equals this divided by this. No, is it the other way? Sorry, it's the other way, isn't it? So we take... Yeah, it's like 200% of the float is shorted. It's something crazy like that. Am I doing that right? Because it's a negative number, but it's not. That's just because... Make sure. There. It's not negative, obviously, but... It's like 300% of the float's shorted. Something crazy like that. And actually, what I can show you guys is this part, right? The craziest thing about all this is they actually had that up. Right? So, like, here we go. Give me 2 seconds. I'm pulling this up for you guys. If I'm losing some of you, I'm sorry, but I'm just trying to show you how this works. And if you're learning something, great. If not, then I understand. But all right, here it is. Finally found it for you. Look at this. Short interest 3.2, right? That's what I had on my spreadsheet. What's the short interest percentage of the float? It was 430%. I mean, something's going on here. Something stinks. And you know what's funny? When you look at the Ortex on it, 15% short interest. You know, no utilization's at 40. Something's not adding up here. Like, I just showed you the numbers. And, like, if I'm doing something wrong, that's great. Show me. Show me what I'm doing wrong. Because there seems to be a lot more institutional ownership on the stock, unless every single one of these people sold since the last filing. And we're talking about, like, and look, who is this that owns the stock? Oh, some Renaissance is there. BlackRock. So something's going on here. Some weird's going on here. I showed you guys. These insiders, they're still holding. Like, they have it on their, like, current reports that they're still holding all these shares. That's 48 million shares, right? 48 million shares right there. That would leave you with, because remember, shares outstanding is 63. They're still reporting the same exact number. It's not like your shares outstanding have grown. If all of a sudden the shares outstanding were 92 million, that'd be totally understandable then, how are these numbers. But they still are reporting these, and every time they file, they have to report the updated numbers. I don't know if you guys know that, but that's how it works. So these guys still are reporting 63 million shares. Their float is only 14 million, though, if we add up the biggest three institutions, or insiders that are holding, which means that when you have 26 million that are still filing 13Fs for Class A's, you get a negative float. And I just showed you that Ortex, quote unquote, made that mistake. Right? They made this mistake. And they were reporting it like 300% short, which is the number I got. Fintel was reporting it at 430% short. Something's weird with this. and I can't get anyone to get back with me. I contacted IQ Capital, I contacted S&P Global, trying to get clarification on this. I've asked people to look at professionals to look at this, and I said, show me what I'm not understanding then, because I'm seeing more shares, and they're like, yeah, that's kind of weird. Like, everyone's very dismissive about, like, oh, well, that can't work. Well, I know. I just showed you. I feel like I'm taking crazy pills, like, because everyone's like, yeah, I got the float at around 30 million. I'm like, yeah, I see that, but if you add up the numbers, that's not what they actually add up to. Like these guys have 29 million Class A's. They have 11 million Class A's. They have like 6 million Class A's. If you go through the filings and actually like look at them, all those are still there. So I don't know what the disconnect is. But I made this one just so it would fit closer to the numbers. But that means then they're still at 41% short interest, and Ortex is reporting 15. So like something's off here. Like something stinks, and I don't know what it is exactly. And I'd love to tell you I figured out how they're coming up with these float numbers, but like when I actually add up what's been gone through on each and every filing, because we had a couple guys that went through every single filing, they're still there. I mean, you're talking about a lot of insiders are buying on this. Like something's weird. So I can't put my finger on it. I'm trying to still figure it out. I've been writing their investor relations as well, and they have not gotten back to me. But I want to get clarification on this. And I'm not telling you guys to jump into this. I mean, obviously, if you do what you want with your money, but I just think something's weird, and I want to get an explanation for it because it doesn't make sense to me. So, all right. So, Bill Wang, Archegos, that was the name of it. Yeah, Archegos Capital. Still holding my ATER at my average now. Any opinions on RedBox? Sure. And Howard Green has 2. Yeah, like look how many shares you guys have. I just want you guys to realize this. Look how many shares you guys are saying that you have inside the chat. And a lot of you can't link them. Like, a lot of you guys have a ton of shares that you can't link. I'm just saying. All right. So, all right. So some people want to talk about RedBox. I just want to see the merger is going to take it down to 50 cents. It's risky. If it squeezes, it'll be wild. All right. So let's just wrap up here on the DTC. I don't know for a fact what's going to happen here. I can tell you based off of just this, it wants to see the upside of this cloud. And that would be up here in the like $6, $7, $8 range. But it's flattening out right now. And it's because it doesn't have a lot of retail attention. Like the stock is trading less than 1 million shares each day. So at this point right now, like this day it traded 2.5, but it's got no volume right now. It's got less than 1 million volume on all these days. It's bleeding, and that kind of reminds me of Aterian, where it was just barely 1 million in volume some days. That means there's very little liquidity, in my opinion. And because the stock has very little liquidity, it means it's going to fly up and it's going to fly down very, very easily. So it's obviously something to keep an eye on. I personally think that it's the start of something, but I'm still trying to get clarification. So if you want to wait till I figure out more stuff, then that's fine. I'll write DD on it eventually, but on DTC, where did you get the amount of shares for Summit? I show 44 million as of. Okay, so the 44 million is broken down into 2 sets. So the first set of them is broken down into 29 million, and then the other ones are actually Class B shares for the 44 million in total ownership they have. From what I think, that's what if I remember correctly, that's how it breaks down. So like if you add the 29 million, 29.67, or we can do it this way. If we do 44,034, right, minus 29,867.3. There you go. That's exactly what it is. So take your 44,034 and then 960, that number right there, and you subtract out. This is actually listed inside their stuff. These ones are Class Bs of that number. So I only took the Class A's out. So I'm even being really conservative about this. I'm not putting in the 44 million total, Carl. I'm putting in the exact numbers that we get from the filings. So that is the 29 million that are Class A's. These ones can be converted into Class A's later on, but at this point right now, they're still Class B's. So, but I'm only just concentrating on the Class A's right now. So this is how crazy this is. So this number right here, these numbers right here, these three just by themselves. I'm not even including the CEO who just added another 90,000 shares, or the CFO who just bought a ton of shares. I'm not even adding any of those in. I'm being super conservative at this, and I'm getting a negative float. Like, I don't know what to tell you guys. Like, something is completely messed up here, and I don't know why nobody seems to be like, yeah, that's a huge issue. Like, if you go through the filings yourselves, you'll find out that these guys are reporting way more shares that are being owned than are being actually like accounted for in any of the short data. NASDAQ is, Carl says NASDAQ is also showing 125.38 institutional owners. Yeah, like, it's not just me. I just showed you guys a couple, like, here. This was them right there. They're showing 129 right there. NASDAQ is showing 125 million, Carl says. And look at this. Solo Brands, they're showing 81 million institutional longs at 129%. Guys, there's only 63 million shares outstanding. 63 million shares outstanding. And yet we have these three owners only leaving 14 million of the float. And then on top of that, another 26 million being reported. Like, I don't know what to tell you. And that's not including retail. Like, retail's not even factored into this. I'm telling you, something's going on. So, anyway. Okay, we'll finish up with RedBox then. So, but hopefully that answers your question, Carl. When it says NP next to the security, does that mean that those shares are accounted for somewhere else? Where do you see NP? Was there something that I had? Where do you see NP? Oh, right here? Oh, it's a different type of form. Right, so this is a 13F. That's what institutions have to file with the SEC. 13F's A's. All right. So let's put out NP. Yeah, it's an N port, right? So N ports are used by funds or other money market funds under the Section 30B Act. So N port forms. If you want, I can link this. You can pull it up. Yeah. There we go. And you know what? I've always just called them N ports. I'm pulling it up for you guys also. Because I want to know too. What he's saying. Maybe it's just an acronym, but Form N-Port is a portfolio form requiring registered funds to provide portfolio-wide and position-level holdings on a monthly basis reportable to the SEC. The form will require data on the funds investing, including data related to the pricing of portfolio securities, information regarding repurchase agreements, security lending, and counterpart exposures, terms of derivative contracts, and discrete portfolio level and risk measures to better understand the fund's exposure. So that's what the imports are. So I'm telling you guys, I don't know what's going on with this thing, but some just weird. I've never seen anything like this as far as like the last time I saw something like this was GameStop, but like at the time they had a way higher short interest. Like the short interest on GameStop was insane, but they also had institutions that owned the stock more than the float, and that's where like all that stuff started. Because his theory was like, okay, well, he was saying fundamentally this thing's undervalued, which was true, but he also noticed that there were over 100% institutions owning the stock, and at the same time that didn't account for any retail. So, I don't know. Okay, Hitch Tremor says, import. I read that import indicated that the shares are reported elsewhere. Okay, so let's go through it. Let's figure it out then. So with these guys right here, Watchdog, whatever, let's figure out what this is, right? So where else could they report those shares? And let's see who they are. They're Global Growth Fund, Long-Term Growth Capital. Is there another? Let's see if there's another one by that name, right? So we hit Control F. Sorry, on the wrong document. Control F, and let's look up the name of the WAS. Right? And so the three of them right here. So they filed a 13F, right, with 2 million shares. So, okay. So could these two added up be equal to that? Let's do it. Because that would help out a lot. So equals, we'll say this number minus, and then this one, and minus, is it? I'm having trouble tracking it across. It's this one? No. They don't add up, right? Unless I'm getting the... Make sure I got the number right? So it's equals this number minus this number minus this number. Yeah, it doesn't add up. So, I don't think that's right. These look like different funds. And they have different cost bases also. Look, so the average price on this was This one was at 1707. This one was at 1551. So even though it's the same group that owns these, they're all different prices. They all have different share counts, and so they don't add up. So I don't think that's right. All right. You know, I understand, but look, I just showed you that example. Like, that didn't add up together. Like, here's the 13F, and the MPs together don't equal that. Yeah, it's fine. Hedge Trimmer, go ahead and DM me on the Discord, and I'll just link you the document. We can play with it. But anyway, yeah, so that's what I've been seeing on this one, and I'd love to figure out the numbers and get them right, but they're just not adding up right now. And maybe we can figure it out. And they look like they're different funds also, if you saw that. So I would have loved if that equaled out, so that way I could subtract out the ones out and we could figure out what the institutional ownership is. But, I mean, let me just show you the last portion of this, which is if I go here to institutional ownership, according to Fintel, right, and I open it, look at this. They're reporting the 81 million for institutional ownership. So that can't be right either when you only have 63 million. So, like, there's a huge difference between 81 million and 26 million. Like, I feel like I'm being super conservative here, and I'm still not getting the right numbers. Like, Fintel's reporting 81 million institutional longs. I was only using 26 million. I mean, you want to get stupid, and fine. All right, let's put in Fintel's numbers. 81 million. What was it? Should we get stupid? 81,947. You can get stupid if you want. Like, what do they say the insider ownership was according to Fintel? Right? We'll pull that up too and put those numbers in. Just for fun. You guys want to see this? They're reporting insiders have 34 million. So I should probably make sure the whole thing is included so you guys can see. All right, let's put in Fintel's numbers just to see. Actually, you know what I want to do? I'm going to get back. I'm going to put Fintel's number here. I'm going to put it right here, and I'm going to put Fintel. So let's put Fintel's numbers in, pretending Fintel is correct. Which, this is going to get fun, right? All right, so Fintel's reporting what? Where is my... I don't know. For some of you, this may be super boring, but for me, this is how I think it's interesting. So, let's look at this. So, DTC, insider trading and ownership reports. They're reporting insiders own 34 million, right? That's what I used here for the conservative numbers. But we're using Fintel's numbers all across the board. So, we're putting in the 34 million, not in percentage. Okay, there's 34 million, right? Then, what did we say they were? What did we say the institutions owned? Pulling it up right now. institutions owned 81. Pull it up here. 81,947,984, right? And then we change it to number and oops. Da, da, da. 947,984. Okay. And then I'm going to take away. All right. Okay. So here are our numbers now. Ready? So if we take, right? Oh, wait. I need to do one last thing. So we need to do your float then is, right? We take our shares outstanding minus the insider ownership, right? Which gives us this number, but because it's defaulting to that, go back. There we go, right? So we have this number now, right? So then if we take our free float, that would be this number minus our institutional ownership. So these are Fintel's numbers. So we have a free float of negative 52 million. According to Bloomberg's actual, numbers that they're reporting on their site. So, if you take, I guess, it's like 1,000%. It's something stupid. So, yeah, it's setting off alarm bells in my head because something's not right here. And, this stock isn't acting right either. And nobody's responding back to me. That's the other annoying thing is like, okay, if I'm wrong, just walk me through how I'm wrong. Just show me. That's totally fine. Like, you're claiming that, and here's the thing, like, Ortex numbers are crazy. Ortex is saying it's 15% of the float shorted. And they're saying that the free float is 14 million. How? Where are you getting a free float? Like, I don't know where they're coming up with their numbers. Like, I literally can't come up with their numbers off of the filings. So, something's going on here. I will keep digging. We'll figure this out. But I just want you guys to know that something's going on, and I hope at some point we can either learn what I did wrong or what I'm doing wrong, and then I can better show you guys how I did something wrong, or there seems to be money to be made here because something's weird. Even at 40%, this thing would have been like really a great squeeze play. It's got good fundamentals underneath. Yeah, they're cash hungry right now, but like these guys could fly because there's lack of liquidity. There is just absolute no volume. That's the thing they're lacking. When they got a little bit of volume, you know what happened? Look what happened. Let's just zoom out a little bit. When they got just the slightest bit of volume here, the stock flew up to, what was that, like 553 from all the way down to like, it was up $1 and some change when it got some volume. you can see what the stock does on very little volume. That was what, like 2 million shares traded, and this one was 1.7. You see how much they dropped it on 2 million shares on the earnings? Their earnings wasn't even that bad. They just missed on revenue. So there's also no SOG in their corporate bylaws. Yeah, it's... I don't know. Mr. Rat, are you inside the Discord? Are you part of the Discord? So, sometimes your YouTube names don't match your, your Discord names. So I don't know who everyone is sometimes. So if you're already part of it, I apologize. Okay, what's your name on there? Oh, you're Mr. Midway. Okay. Yeah, I've seen you in the Discord then. Are you part of the DTC channel? Have you joined that? Yeah, but yeah, just send me a DM if you want to take a look at that. We can go over the numbers, but all right. I should be going to bed soon. I went past my normal, but I was getting excited showing you guys what I was looking at on DTC. I just haven't had time to write a DD on it. But yeah, like if someone wants to start digging on this stock, this is a really interesting one to start digging on. If you don't know anything about like how to read these filings, this is a good one because it's complex, but at the same time, I think it's a really interesting one to kind of dissect. Like there's a lot of things going on with it, so I think there's something here. I just don't know what it is yet. So anyway. But yeah, I'm super excited for, I think at some point all these memes are going to bounce back. I really do. I think it's a matter of time before somebody gets margin called or something happens where these guys just get absolutely like toast. And I'm excited for when that happens because honestly, these guys have been bending and, finding every loophole, and it'd be nice for them to actually, just get smacked for once. I mean, it's true. I mean, like, think about how long this stuff's been going on. Like, they've been able to do this crap for this entire time. And it wasn't until GameStop kind of exposed a lot of how the seedy underbelly of the market to the normals. And now you can't put the genie back in the bottle. Like, that's just my opinion. So what I'll do for now is I'll link the Discord. If you guys aren't part of it, please join. It's free. It's a lot of smart people in there, and we have a good time usually, either complaining or doing our normal stuff, which is researching. So if you want to start learning, or if you already know a bunch and you want to bring your expertise, it's very welcome. I enjoy talking about stocks and doing all this stuff, and so I want to meet and talk to as many smart traders. Or if you're new, you come and learn, like ask questions. So that's the whole idea of the Discord. It's why it's free. I know a lot of other people charge for their Discords. But at this point right now, we're trying to keep it free, and we're trying to make sure that people get to learn. All right. You guys have a great evening. If you can like and subscribe, that would be great. It will help other people find these videos and hopefully find them, helpful. But You guys have a great evening. I'll see you tomorrow.